All right. Good afternoon, everyone. Thank you for attending this afternoon's session. I'd like to welcome you all to this best learning series, and this is actually part one. So again, this is first of the three best series. So that's basic education on stock trading. So this session, we're going to focus on earning from dividends and undervalued stocks. But before we get onto that, I'd like to introduce myself first. Again, I'm JP Billones from First Metro Securities. I'm actually a personal finance and investment literacy advocate. Currently, I'm a certified investment solicitor, and I'm also a certified equity securities salesman. So these licenses are from SEC, and they are tied under our company, which lets you know that I could actually discuss about stocks and mutual funds. I also have the certified financial markets professional uh, license. So in that case, this is just a program from another institution where I wanted to learn more about the financial markets. Currently, I'm the Business Development Officer of First Metro Securities stationed here in Mindanao. And again, just to let you know, First MetroSec is actually part of the Metro Bank Group. So you probably know Metro Bank more since they are the most seen. You have branches everywhere. But for those who'd like to trade the stock market, that's where we come in. That's where we help our clients buy or sell stocks in the market. Now, just to share with you that First MetroSec has been long in this business. We started our operations way back 1994. On 2006, we launched our online trading website, www.firstmetrosec.com.ph. We also introduced the country's first mobile stock trading app. That's in 2012. On 2016, we launched FundSmart, which is the one-stop shop for mutual fund investing. So last Saturday, we actually discussed that and how you are able to do so. And 2017, we offered the dollar-denominated stocks and mutual funds online through FundSmart. 2018 was a great year for us. We were awarded by as Philippines Best Broker by Finance Asia and Best Online Broker and Best Online Trading Platform by International Finance. And we're very happy to let you know also that 2020 we were also awarded to be Philippines Best Broker by Finance Asia. So for the past 4 years, we've won this award for 3 years already. That's 2017, 2018, and this year, 2020. Now, what do we do here in First Metro Securities is actually quite simple. We understand that the current profile of the stock market investors here in the Philippines is the following. So this is actually an updated file from PSE. This is their 29 data. They found out that there are currently 1.2 million total stock market accounts here in the Philippines. All right, but that's where it comes less than 1% invest in the stock market simply because currently there's around 100 plus million uh, Filipinos in our country, but only 1.2 million have stock market accounts. Now, maybe some of them even have multiple accounts, be a joint account with their family member or an in trust for account with their child. So that's where stems yung less than 1% invest in the Philippine stock market. And as you can see, out of that 1.2 million accounts, 782,000 are actually online. So this lets you know that many people actually prefer online, which is First MetroSec online trading platform. Now, the demographics of this, most people who invest market actually comes from Metro Manila. 75% of this 1.2 million comes from Metro Manila. Then followed by the other parts of Luzon at 13.9%. But in Visayas and Mindanao, it's still below double digits. No, so Visayas is 5.3%, whereas Mindanao is 3.3%. So konti pa lang talaga yung penetration sa Visayas and Mindanao, and that's one of our roles also as assigned here in Mindanao. So to actually promote about the beauty of investing in the stock markets. And as you can see, most people who invest, 80% are actually employed. So hopefully we have I think many of you here are employed, so thank you for spending your time after your work in this session. So giving us the time to actually learn more. Now, what I'm also happy to see is that there are actually around a few percentage. Let me look at this. 2% are actually students. So I find that really interesting since, yeah, so even as young as mga 18 years old, they could actually open their stock market accounts. And the time value of investing is they're letting their money work hard for them. Now, comes to the gender naman, I think it goes to 50-50. So equal lang yung between male and female. But as you can see, majority of stock market accounts are between 30 to 44 years old. So I think about two-thirds of the total stock market investors here in the Philippines are actually in the younger demographics. All right. So yeah, so it's very exciting. So that's why here in First MetroSec, what we love to do here is to actually bring education to, be it in events, be it in offices, or be it from invites, to promote the advantages of investing in the stock market. Now, way back, what we used to do is actually go to private institutions, tap government entities, and even tap schools to educate different people the value of investing in the stock market. So, but right now, we cannot do this already because we're no limited number of people that we can hold in a certain gathering. Thus, this format today, the webinar. And I'm very happy na marami tayo. We have around 140 attendees this afternoon. And I hope you will enjoy this afternoon session. So, which brings us to today's session. So, today's session is Best Part 1, Earning from Dividends and Undervalued Stocks. Now, ako lang nagsisimula dito, no? But later on, in between the sessions, Royce Aguilar will actually be joining us. We're very grateful that Royce actually gave time to be with us here this afternoon because he is one of the members of the research team. And yeah, Royce Aguilar will share to you one of the reports that he actually produces from their department, which is the stock screen report. So later on, we'll hear more about Royce. All right. So yeah. So this afternoon, we're going to talk about the following. First, how do we earn dividend income from stocks? So what are the works behind that? How do we know if our dividends are safe? Now, it's good to have dividend income, but how do we know that those payments are actually safe or the company could actually pay the dividends? Next, we'll also go and discuss about how much is the stock's value. So, yeah, so how much is it actually worth? Next, we'll also know if the stock is cheap. So, depending on its value, how do we know if the stock is cheap? And lastly, does the stock provide high return to shareholders? Because it's good to be able to buy stocks at a cheap level, but uh, does this stock give high return to shareholders? So these are the things that we're going to talk about this afternoon. So first and foremost, before we move any forward to the educational part, I'd like to welcome also Royce Aguilar from our research department. So he is actually one of our equity research analysts. He actually authors most of the Traders Playbook research report, and also he brings to us this stock screen report. Now we're very lucky that he is here with us so he can share to us what's the thought process, what is the methodology when it comes to creating the stock screen, and of course, how do we actually interpret the stocks that were screened from the report. So to give us an introduction about the stock screen, I'd like to introduce to you Mr. Royce Aguilar from our research department. Royce?
Okay. Yes, it's okay. So can you hear me, guys? So good afternoon, everyone. So right now we're already 150. So thank you, everyone. So for the stock screen, So we upload this actually every Wednesday. So for those who um, subscribe or has an account with us in the First Metro Securities, you can actually access this tomorrow, the new issue or the new version, the latest version. So basically, when we made stock screen, um, we try to cater to all kinds of investors, right? So for example, if you're an investor who likes to ride on growth companies, or are you for example, are you a more conservative kind of investor who just likes to invest in dividend yield stocks, or are you a more um are you a more kind of investor who likes to takes kinds of risk, who likes to buy stocks that are underrated by the market? So all of those kinds of behavior you can actually see or apply through the stock screen. So you will see here we have four screeners. So we have riding the momentum, we're focusing on well-established companies with sustained profitability and high earning expectation. When you, for example, like to buy cheaper stocks who are really oversold already, yet has this growth prospect, so you can buy either value play or unloved, right? There's just a different measurement, but technically that's the gist of it in terms of behavior. I mean, for example, if you're a more conservative investor, you can buy the dividend yield. Okay, so just a spoiler. So for example, if you take a look at the latest version of the stock screen tomorrow, you will see that all of our screeners outperform the PSEI year to date. So this tells you that the stock screen really caters to all kinds of investors, and yet you can actually still beat the market, right? So there. So that's the gist of the stock screen. Okay, so yeah, okay, okay.
All
So
right.
there, no,
Thank you for
yeah,
that
yeah, okay, yeah.
introduction, Royce. And yeah, maybe you can bring through this different investing as a brief one.
Okay, so here you will see the four investing styles, like I've mentioned. For example, if you like to buy stocks who seem expensive, yet it's still poised to grow significantly. So you have riding the momentum, you have high EPS growth, um, yet with high PE ratio, right? Expensive but growing. So those are the stocks you will see. So for example, you're seeing um, Emperador, for example, Emperador who has been rallying lately. It may seem expensive, but if you take a look at the earnings profile of the company, that it actually grew at this pandemic period. So those are the stocks that you will see, right? So of course, we will tackle today more on value. I believe we'll tackle yield seeker and value play today. So nevertheless, um, in terms of value play, we'll discuss, for example, stocks that have low price to book ratio, yet high ROE. So you can classify this as stocks that are undervalued but provides high returns for its investors. And then yield seeker. So basically, the yield seekers for the more conservative, or who for those kinds of investor who wants to allocate part of their portfolio to dividend yield. You can take a look at our yield seeker screen. So provides high dividend coverage ratio, which I believe JP will discuss later, what the definition, and high dividend yield. So there, that's those are the screens we'll talk about today: yield seeker and value play. So okay, so JP.
All right. Thank you, Royce, for that introduction. Hopefully, that will give our 153 attendees this afternoon parang they say this a teaser of what we're going to discuss in depth this afternoon. So again, this just gives you a bird's eye view of what we're going to discuss in best part one and best part two. As mentioned, Royce will be discussing today about value play and yield seeker. But again, we understand, no, maybe most of you who attended this afternoon are actually beginners. So we'll try to share with you more details about these different ratios. All right. So let's start with dividends. All right. But to start off, I just want to share with you a quote by Kevin O'Leary. So Kevin O'Leary is actually a venture capitalist and he is also an investor. Yeah. So he said that I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that? The stock that does not pay a dividend is a speculation, not an investment. And as you can see from Kevin O'Leary's quote, that's you can really feel from that statement his investor profile. So as you can see, it's very for him, the most important thing for him is that it pays dividend because he is an investor and he likes stocks that pays dividend than those stocks that do not. So he's the type who'd like to have return on investments or some level of income. So again, this is Kevin O'Leary. When it comes to investing, some people would agree with you with your investment style. Some people would also disagree. So, but let's look in depth about dividends. First, let's recap. I think this was already discussed to you in stock market on 101, wherein the two ways for you to earn in the stock market. So first is of course price appreciation. That's very simple. You buy stocks at a low price, you sell them at a much higher price. Now, if you're buying for price appreciation, you're actually looking into the growth of the company. So its ability to earn continuously and more stable in the future. But of course, that's just one way for you to earn. The next way to earn in the stock market is to actually earn through dividends, wherein that is the share of the stockholder from the company's profits. Now, of course, for people who are looking into dividends, they're the type of people who are actually looking for income. So these are the things that come to you. We can say it's some form of passive income. All right, because that's just the share of the company's profits. Now, to understand more about the dividend, so I think best part two about PE ratio and how a price affects earnings, you'd probably discuss more about this first side, the price appreciation. But this afternoon, we're going to talk about dividends. All right. So how is the dividends paid out to investors? So for example, in a fiscal year or in a certain period, the company would have a profit or net income. All right. So I think that's one of the first characteristics for you to have dividends. The company must be earning. All right. Then from this earnings, the board of directors would actually decide what to do with those net income. And the board of directors usually choose two routes. All right. First is they could actually invest a part of that money to the company. So they're going to reinvest that income back to the company and that enables the company to grow and scale. For example, if they have expansion plans, so they're going to set aside their net income in order for them to expand their business further. All right. But sometimes the board of directors also decide that they could actually give back to the investors. And this is where dividends come in. The amount or the portion of the profit that is given back to investors, that is what you call your dividend. All right. So yeah, so actually from this figure, you could actually determine that for those companies who are actually reinvesting back into their business most of their profits, then giving back to investors, those companies are actually great companies because they're still trying to grow their business. But some companies have already some form, no, they might have been the major player in the market already. Most of the subscribers, they have a major market share already, then they have the ability to give more to their investors. All right. Because this part is already limited for them. And you'll see some examples later. All right. So again, just a recap of Stock Market 101. The PSE is composed of different types of stocks. So you have preferred stocks and you also have blue chip stocks. And the others are your 240 plus. which actually comprises your common shares. So that's your two types of stocks, your common stocks and your preferred stocks. Now, let's go into detail these types of stocks. So first, let's talk about preferred shares. So preferred shares, they are the types that actually pays fixed dividends. So they have a rate, a predetermined rate. And from experience, most preferred stocks actually give relatively higher yields than common stocks. And of course, that's one of their ways for to attract investors to go to preferreds than common stocks. Now, the beauty of this, since preferred stock is in the form of technically it's a hybrid of debt and equity. So since it's a hybrid, it has an equity characteristics. There's a potential for it to appreciate in price. I've given here some examples. So you have here Ayala Corp's preferred shares, ACPB1. So their market price as of was at 506.5, which will give you around 4.83% gross yield up until the next optional call date. And you also have here GT Cap's preferred share and also San Miguel's preferred shares and their respective prices and yields. So as you can see, the payment of the dividends are actually predetermined. So most of these are actually paid quarterly dividend. So they're scheduled as all right. So that's the beauty of stuff. They pay some level of fixed dividends. All right. But since the prices fluctuate with time due to trading, supply and demand in the market, this yield, their current yield might not be the same as their initial yield. But yeah, preferred stocks do not fluctuate that much naman. All right. So which brings us to the next type of stocks. We have common stocks or shares. So compared to preferred stocks, common stocks actually have a variable dividend. As you've seen in the previous slide, this is it depends on the board of directors. All right, but when you look at some companies, they actually have what we call a payout ratio. So it's not on the discussion today, but yeah. So some companies have a historical level of payout ratio, per certain percentage from their net income. And mind you, since dividends are variable, some companies actually don't give dividends. So later you will see. And that's the choice of the board of directors if they're leaning into reinvesting more of their profits, or maybe they did not have any profits for the year. Of course, if they didn't have any profits, they cannot distribute uh, as dividends. All right. But if you're looking for price appreciation, common stocks have a bigger potential for long-term gains than your preferred. All right, when you look at their price fluctuations, common stocks uh, have more potential for growth than preferred shares. So here are some examples. So you have here Globe. So Globe currently nasa 2,200 pesos siya. The last 12 months dividend per share is at 97.3. This makes their dividend yield at 4.42%. And they pay quarterly. All right. Then followed, let's have another example, Jollibee Foods Corporation. So they have a 0.98% dividend yield and they pay biannual. Robinson's Retail Holdings, they have 1.71% dividend yield from the market price yesterday, and they only pay once a year. But again, AGI, they were not able to give dividend last year, so they don't have for the last 12 months, so we can't calculate for dividend yield. All right, so I just showed you these examples again as a general disclaimer for the whole session. As you can see naman in the slides, that this presentation is for educational purposes only. So in this scenario, I just wanted to show you that the variable, the dividend paid by common stocks is dependent on the board of directors. Because when you look at the history of AGI, there were also years that they were able to pay dividends. So in just this scenario, the last 12 months, there's no dividend per share, so we can't calculate for the yield. All right. So hopefully that is clear. So by the way, as we're going to go deeper into these topics, feel free to put in questions to your in our go-to webinar navigation pane, so that if you have questions, yeah, feel free to put them there. All right, so now we are at 160 attendees. That's very encouraging. All right, now we've been talking about dividend yield. So how do you actually calculate this? So yeah, but before knowing that, we must learn first how to earn dividend income from stocks. So the answer here is very simple. Since dividend is for eligible investors only, then you must own the stock. All right. Now, when you talk about dividends, there are four dates that you have to remember. So here I created smart art for you. First is the declaration date. So the declaration date is the day the board of directors announces the dividend. After usually in the declaration or in the disclosure, it's also indicated their ex-dividend date. And when getting dividends, this is probably the most important date to remember, because the ex-dividend would let you know if you are entitled for the dividend or not. All right. So the ex-dividend date is actually the day wherein you are not eligible for dividends. So if you bought the stock on the ex-dividend date, you are not eligible for the declared dividend. All right. But if you bought before and held it up until the day before the ex-dividend date, you are entitled for the dividends. All right. So you can even sell. For example, you were able to hold up until the trading day before the ex-dividend date. Then you sell on the ex-dividend date. You're still entitled for dividends. All right. Next is the record date. So this is just the day the company list all eligible shareholders. Now, here's the common misconception of the record date. So the record date is actually included also in the disclosure from yung declaration date. But most common misconception here is that you need to buy the stock on the record date, because that is the day that the company lists all eligible shareholders. But actually, what the company does is this is just the day that they record, but their reference is the ex-dividend date. So if you own the stock at the close before the dividend date, you are entitled for the dividends. So don't worry, no. This might be confusing for beginners, but later I'll show you an example on how these four dates work. And lastly, of course, is the payment date. That is the day that the company disburses the dividend. All right. So those are your four important dates for dividend. Now how do you know about this? So in our platform, you just go to your website. So hopefully most of you here are already existing FirstMetroSec clients. So just go to your platform, then go to research, then click on company data, then enter the stock code that you'd like to look into the dividend, then click on dividend history. And here in the dividend history, you'd be able to see the usual dates that the company declared dividends. Understandably, the declaration of these dividends are somewhat could be predetermined, or we can actually estimate when they will release the following. And for example, I'll give you here. As you can see, Meralco for the past few years, they have actually have their ex-dividend dates usually fall late March and late August. So if you're looking to the dividends of Meralco, then you must monitor weeks before this if they have already declared dividends. Which begs the question, how do you know if the company was already able to declare dividend? So all you need to do here is just to click on company news from the platform. It will take you to the disclosures or the relevant information that is posted on that stock, which is actually sourced from PSE Edge. So you can simply look here if they already declared dividends. So can you see here the declaration of cash dividends? Yeah, so you can see that there. So you simply click on that, then this will pop out. So the company news. So Meralco declares declaration of cash dividends. So here you'll be able to see uh, the amount, the dividend per share, the record date, and the payment date. all right, and the source of the dividend payment, all right. And if we go back in the dividend history, once that is declared, you could actually see here the ex-dividend date, which again is the most important date to remember if you want to be eligible for the dividends. All right, so there you go. That's how you know about the dividends of the stocks that you like. Now, again, I want to reiterate this question because this has been a common cause of confusion from many investors. When should you own the stock to be entitled of the dividends? All right, so the answer here is, again, as I mentioned kanina, at the close of the trading day before the ex-dividend date. All right, so that is the date now. So that's why very important yung ex-dividend date. So if you're able to buy the stock before and you were able to hold it up until the close of the trading day before the ex-dividend date, you are entitled of the dividends. All right? But if you bought on the ex-dividend date, kaya nga siya tawag ex-dividend kasi walang dividend. Ex-dividend. So if you buy on the ex-dividend, you are not entitled with the dividends already. All right? So make sure if you like the dividend given during that period, you must consider the ex-dividend date. All right, so here I'll show you some examples. All right, so here are some examples. No? So for this example, I actually used, I believe this is Meralco. All right, so there was a Meralco actually declared dividend last February 24. So what I'm going to share with you right now is the chronological order of the dividends para mas nilihan natin yun for dividend dates. So Meralco declared dividends February 24. You can see this in the platform SEF. Then contents of the declaration actually included the ex-dividend date. It included there that the ex-dividend date is March 17. That means when should we buy the stock for us to be able to be eligible for the dividend payout of this declaration? So you can buy it at any day before, but make sure that you still hold the stock the trading day before the ex-dividend date. And that is 16, March 16. So by the close of the trading day, dapat hawak-hawak niyo yung stock. Okay? Because if you were able to hold onto that stock, when the market opens on 17, you're still holders of the stock. Remember, you can already sell that stock if you're just for the dividend. All right, so later I'll teach you one of the strategy that you might find useful in some certain instances. All right, so that is 17. Then the next date is the record date. That's also included in the disclosure. That is March 20. So yeah, and of course, hintayin na lang natin is yung payment date, which is April 15. Right? So it's the general chronological order of the dividend date. So hopefully with these examples, I was able to clear things with you. If you have questions, feel free to drop them in the questions below. Then later when we do Q&A, we'll try to answer them. All right? So after learning about the dividend dates, how much will be our dividend yield? So that's very important, especially on the declaration date. So for us to calculate that, it's very simple. So from the dividend yield is calculated by dividing the dividend by the current stock price multiplied by 100 to be in percentage form. So from the declaration of the dividend, you would know how much is paid. Then till then, you'd be able to how much be your yield. Let's say they declared it during this time. What was the you can actually calculate the yield that you're going to get already. So let's have some examples here. So let's say Robinson's Retail Holdings, the trailing 12 months, their last 12 months dividend was at 1 peso. So a stock as of August 10 is at 58.4. If we divide 1 peso by 0.4, multiply by 100, that makes our yield to be at 1.7 pesos, 1.71%. All right. So let's have another example. Let's say si Globe. So When you look at Globe, their dividend per share last 12 months is 97.33. Then the stock price is at 2,200. So that lets you know that their dividend yield is currently at 4.42%. If we assume that that dividend per share would continue in the next 12 months. All right. So yeah, that's how you calculate your dividend yield. All right. So, but that is gross lang ha, because meron pa yung dividend tax, which is actually 10% of the dividend. All right. So yeah, that's how you calculate your dividend yield. So as you can see, for example, just a simple ha, again, just for educational purposes. For example, si Globe, siguro we can say that it has already reach many subscribers, even to be a major market leader in their field. Then you can see that it gives more healthy dividend, no, compared to, let's say, RRHI, who is actually growing, no, who is actually trying to grow its business back. So yeah, because as I mentioned kanina, the board of directors could actually divert it, no, should they give more dividends to current investors, or should they reinvest the money in order for them to grow their business further. All right. So yeah. So just for some insights for this calculation. Now, again, here's what I want to emphasize to you, that there is always a trade-off. Now, ganyan yung buhay. No? So companies that are generous with dividends tend to grow less quickly. All right? Those less generous tend to grow more quickly. Kasi nga, if they have less dividends, they pay out lesser dividends, they are able to grow their companies. But those companies who have already grown, all right, who have already grown, they have the ability to actually be more generous to their existing shareholders. All right, so that trade-off is very evident in most parts of the market. Now, let's try, no? Let's try another example sa dividend yield. Let's say let's look at the company Semirara Mining and Power Corporation. Now, its dividend per share is 1.25 for the last 12 months. Then the current stock price is at 9.4. So from what we've learned kanina, dividing the dividend divided by the stock price multiplied by 100 gives us a dividend yield of 13.3%. So very, I don't know, very healthy dividend. But again, when we see this, now, although this is very attractive, I think this is one of the things that I really learned in investing in the stock market, is to really ask, no, the right questions. So let's try to ask, no, bakit kaya, no, why is it higher than the average dividend yield? When you look at most of the index stocks, siguro you can see there 2 to 3% dividend yield. That's already, I can say, that's average. No, maybe Royce has a better number later to share. No, but yeah, I think it's between 2 to 3%. 4 to 5% is already healthy, all things considering. No, so why is it paying a higher average yield? So, which brings us to the next question. Ano ba yung nagko-cause? What causes the dividend yield to increase? So let's go back to the equation. So when you look at the equation, two variables. You have dividend and stock price. So if this yield increased, is it because it paid higher dividend? Itong numerator nag-increase. Kung lumaki to, same ito, it would have higher yield, right? And yeah, so that's actually quite encouraging if you when you look at their statements. Now, if tumaas yung dividend yield, then that only implies that most probably their income likely increased, and that is a good thing. All right, that's the first scenario. Yeah, as I mentioned, did the dividends increase because of higher earnings? So because there's also an instance wherein it paid out higher dividend, but it did not reflect in their earnings. So uh, uh, that might be a worry for some investors. And that's just the first. We can also look here at the stock price, because there's also another possibility. Possible that the stock price has been declining, because if this stock price or the denominator actually goes down, or it gets less, then your yield will also increase. All right. So Yeah, so we'll try to ask those questions now when we look into the dividend of different stocks. Now, when we look at the stock chart of Semirara, I think the answer is the latter. So it's because of the declining stock price. Now, maybe later Royce can actually share more about Semirara. But I think SEC, no, when you look at the prices of coal, it has actually been lowering for the past while on pandemic tayo, which is actually one of its business din. Then furthermore, yung volumes nila ngayon, considering the lockdowns and all, it was expected na lower din siya. So, yeah. So, thus, na medyo yung sentiment ng investors sa SEC is reflected in the price chart. Alright? So, yun lang. My point here is that to beware of the yield trap. So, do you think the company will be able to sustain the yield? So, kasi it's good to have a high yielding, high dividend yielding paying stock. But what if they will cut it a few quarters later? So if you are actually looking into that stock to give you continuous income through the form of dividend, this might be a question for you. If you will cut it, then your future income would also be cut. Next, is the company struggling or causing the share price to fall? So, yan. So, we've seen some other instances nito like si Manila Water noon. So, but ngayon, medyo more relevant si SEC, especially with the upcoming niya na development sa PSDI. All right? So, yan. That's just my, it's good to know how to calculate the dividend yield and spot high-yielding stocks, but beware of the yield trap because yeah, we're looking more forward-looking tayo. All right? So yeah. So how do you get the dividend yield sa platform? So to all our clients out there, so you just go to analytics, then click on financial, then go to dividend yield. It will take you to the different dividend yields, 3-year dividends ng index stocks. All right. So if you have also pro access, ito, I highly encourage you no to actually strive no to become eligible of the pro platform because it's very easy. You just go to the the stats tab, go to analytics, then go to fundamental part, click on dividend yield, and yeah, let's say you're looking into the index stocks, and you'll see here the different dividend yields. So as you can see, SCC is actually one of the top at around 13%. All right, so yeah, and that's why diba sabi ko dividend yields usually nasa 2 to 3%. So you can see that here. All right, so there. So the pro platform, yeah, this is interesting for you. Later, if you're interested, we can discuss it in the Q&A. All right, so yeah. So before but actually no, although yields are actually we need to be wary of them, but we could actually we could actually capitalize on some opportunities through the capture strategy. All right, so this is a strategy that I'm going to share with you this afternoon. So what better way to talk about this than to give an example? For example, si Cebu Pacific. So there was a time that it was trading this way. Again, this is trading view. This is a uh, our charting software sa FirstMetroSec. So you can use this when trading the market. So last May 2019, the company declared 2 pesos regular and 5 pesos special dividend. And that day, it closed at 84.7 pesos. So imagine, they declared 7 pesos regular and special dividend. If you calculate the yield from the closing price, that's an 8.26%. Now, the next day, as you can see, normal to na reaction sa market when may mga opportunities like this, yung relatively healthy na dividend, nag-gap up siya. Alright? Then, it actually closed, it opened 86.1. It opened here. Still, yung yield niya is 8.13. But it closed here at 88 pesos. That gives you a closing yield of 7.90%. Now, a few days, a few trading days occurred. Then dumating yung June 7. June 7 is actually the day before the ex-dividend date. All right? So the closing price then was at 93.3 with yield of this gives our yield to 7.5 pesos. But imagine if you were able to buy at the close or kahit dito at the close of May 21 at 88 pesos, you are anticipating a 7 pesos yield. So 88 plus 7, that's already 95. And it already rallied to close to 95. All right. Then next day on the X date, June 10, yeah, nag-gap down ulit. So open at 89 pesos. So yeah, so if you bought during this time, your yield would be zero. Again, bakit? Bought on the ex-dividend date, you are not entitled to dividend. Wala kang matatanggap na dividend, wala kang yield. Then, up until it traded that way, up until it closed there. No? So, next mo na lang nahintayin dyan is actually your payment date, which this was last July 10. All right, so yeah. So, an example here would be this. So, if you want to use the dividend capture strategy, you may use this example. So, for example, May 21, nag-ano siya 86.1 pesos. All right, you can buy kasi okay sa yung dividend yield you could have bought in the opening price. Then you would have sold on the X date since you just want to capture the dividend. You sell it at 89 pesos. But since you sold it at the X date, you already gained 2.90 pesos. The increase, that's a 3.36% capital gain. But since you are still entitled with the dividend, that gave you a 7 pesos dividend on the payment date. And that way, that's the dividend capture strategy. All right, and that's a nice way to recap then what we've discussed previously. All right, so yeah, so next question would be, is my dividend income safe? But please give me a few minutes, a few seconds. I just need to plug in my laptop. All right, I'm back. So just a breather. So yeah, hopefully I was able to share with you the nooks and crannies of dividend yields and yeah, the dividend yield and even the dividend capture strategy. So next question would be, is my dividend income safe? So because if you'd like to have dividend paying stocks to supplement your income, then you must make sure that the company is able to pay it. Now, to quantify that, we have what we call the dividend coverage ratio. Dividend coverage ratio is actually calculated by dividing the annual net income by the total dividends for common shares. So from the equations, this lets us know that from the total net income of the company, how much was actually paid to common shareholders in the form of dividends. So, yeah. So this tells us that this tells us the number of times the company can pay the dividend from the net income less preferred shares dividend payment. Parang wise we would be able to be more confident that the company is actually able to pay us dividends. So I'll share to you some examples. So PLDT, their dividend coverage ratio is at 133.74. Next example is about this power at 80.8. All right, so from this, the general rule of thumb here is that the higher the dividend ratio is, the better. But I'm not saying here no that Aboitiz Power is better than PLDT because I believe the coverage ratio is better. This numbers is better used within the industry. Right. So when you look at the telco industry, who gives higher dividend coverage ratio? So in the power industry, who gives the better dividend coverage ratio? So yeah, so just lang a thought for you moving forward. All right, so that lets you know, no? Again, dividend coverage ratio, this gives you more confidence that the company is actually able to pay you back, all right? Pay you the dividends. So, but mind you, there are actually other types of dividends out there. And for this example, I'm going to share two companies that have actually paid out different types of dividends. But for now, we have been discussing more of the cash dividends because most people who they feel that their income more in cash dividend. But there are other dividend forms actually there. So first is you have cash dividend. We've discussed that extensively. But some companies actually also give stock dividend. So in this case, like Metro Bank, they actually give 13% stock dividend. So if you have 100 shares of Metro Bank, then you are eligible. Then you would have received 1 peso per share, then 13% more shares. So if you have 100 shares, you would have received 13 shares more on top of your shares. All right. Also recently, Robinson's Land also gave property dividends. So when you say property dividend, this is actually assets of shares uh, of its own company. All right. So let's say company A owns company B, then he could actually pay property dividend of the assets of company B, and that's what we call property dividend. And we know this that property dividends is they paid no for every if you were eligible of this, then 51.93 every 51.93 RLC shares that you had, you would have been given one APV shares or the Altus Property Venture share. So I don't know if you were able to see the day that this was listed. No, yeah, it was a wonderful story to tell in the coming years. All right, so yeah, that's APV. So hindi lang cash dividend, you also have stock and property dividend. So yeah, so I guess that's it for my part. So I'd like to bring back Royce Aguilar also to discuss further or maybe also add insights of the report that actually applies what the ratios that we have learned. So Royce, I'll pass back the floor to you.
Okay. So, good afternoon, everyone. So I'm Royce. I'm from the research department. So just to further elaborate, the yield seeker. So again, JP mentioned about dividend coverage ratio, the definition of dividend yield, how it's being um, computed. So basically, we'll discuss how for example, how us readers, how us investors can dissect the stock screen or can make an investment decision based on what we see from the stock screen. So, okay, let's start. Next slide. Okay, so for this is the stock screen from last Wednesday that was published last Wednesday. So, for example, I'm seeing this in my I go to the FirstMetroSec website. I see this report. I'm seeing 5 stocks under the yield seeker. So I guess from there, the report does not suggest, for example, if you are an investor who should diversify your portfolio, we do not suggest like buying everything from the yield seeker. So for example, you can buy, depends on your investment profile, which probably one part of which is your age. So for example, if you want to pick at least one, um, you want to analyze one stock before making an investment decision. So let's try one stock, right? So for this time, let's pick Manila Water. So next slide. So for example, if you pick Manila Water, when you take a look at the dividend coverage ratio, it's over 100, so it can definitely pay. It can definitely pay dividends. Given current financial data, dividend yield, that's the implied dividend yield, seems respectable enough for us. So when you take a look at the target price, that's a consensus target price of other brokerage, you can make an investment decision from there that okay, good dividend yield. There seems to be upside in terms of price appreciation. So next slide. So 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 here how do we analyze? So for example, take a look at the fundamental aspect of it. So based from this is based from news, the fundamental analysis based from news. So basically, in a nutshell, we're seeing in news that the government is softening up a bit in terms of its stance regarding its initial stance on the water concessionaires. Keep in mind that last December 2019, Duterte or the government said some statements which implies that it can shut down the water concessionaires for some issues that were happening before. So right now, in terms of statements, in terms of news, we're seeing a bit of a softening stance from the government. So they're ready to deal with the water concessionaires. So that's still the progress right now. So we're still awaiting the progress from the concession agreement. So based from the analyst briefing of Maynilad, so they have the same situation. So in terms of the situation, it's still being reviewed by the government and the Asian Development Bank. So that's the status quo right now. Because at the end of the day, the value of the water concessionaires moving forward will be hinged on the concession agreement. Because the concession agreement consists of how much the water companies will earn. Because keep in mind, at the end of the day, they're still a private company. They were initially a government-owned company. Now they're a private company. They're not a non-profit organizations. They have to earn profit. So in terms of the definition of how big the profit they will be getting, that's one part of the concession agreement. So that's hence the value of those companies moving forward will be hinged on that. So next slide. So that's a fundamental analysis, right? So on the next slide. So here's a stance. So basically there's there yes, okay. So technical analysis. So just to cap off the fundamental analysis, there seems to be an upside in terms of the Manila water, mainly because it has been significant slowdown even until 5 pesos. But right now the upside is capped mainly because of the uncertainty. But we do think, of course, right now Razon now has a stake in Manila Water. It's still being processed, but it seems to be going that way. So given the lessen or easing regulatory risk for the company, there is room for upside for the company. There's still room for upside. So of course, right now it has somewhat proven to be a relatively resilient company, given it is the water is a need, right? So of course it may have some weakness, mainly because of some businesses not operating, but it's still relatively resilient compared to other listed companies. So moving on to technical analysis. On the next slide, you will see it actually broke down. So you can see an upper trend line there. It actually broke down that uptrend line. So right now it's consolidating around below those levels. So let's take a look at the next slide. Yes. If I'm not mistaken, actually, the stock is now trading above its initial resistance. We take a look at the market price close earlier. It is now trading above 12.90. So if that is the case, you can actually buy back Manila Water, right? So for example, if you buy back Manila Water tomorrow, set your cut cost below 11.80. If you're a short-term investor, you can set your profit take level 15. So basically that's how you can make an investment decision from the stock screen. So of course you will see those fundamental, those technical analysis from our reports. So basically you can make a decision of your own, you can make a research of your own, but we'll guide you through, all throughout the way. So we have reports on MWC and the other stocks under the yield seeker. So there.
All right. Thank you, Royce, for that wonderful discussion about the yield seeker report. So again, that's the goal of this webinar for you, is for us to be able to help you understand more of the reports that we put out. And again, we're very thankful for the 160 plus attendees that we currently have right now. And yeah, hopefully, please stick around up until the next session as we transition to the next part. All right, so uh, for the next part, let's start with the quote by Warren Buffett. So Warren Buffett said that it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And yeah, we all know that Warren Buffett is actually a value investor. So this is a really good thing to it's a really a good thing to learn from him on when it comes to how we are actually able to buy a company, a wonderful company at a fair price. All right, so let's start with no. So when you say we'd like to buy wonderful companies at a fair price, we must have a benchmark of how much is the stock's actual worth is. And with that, I'm going to share with you how do we actually determine the stock's value. So we actually have two answers for this question. First is what we call the market price. So how much is the market pricing the stock currently? So let's say for this example, let's use MPI or Metro Pacific Investments. So as of yesterday, it actually closed at 3.26 pesos. So the market yesterday was actually is actually telling us that the stock's value is at 3.26. But again, that value is dependent on the sentiment of the investors and also the dynamics between the supply and demand of the price and the market. But when we look at the other answer, we have the next answer is actually the book value per share. Its actual worth based on its books or based on its financial statements. And for this, it's not actually as straightforward as the market price because you'll just have to look at the quotes for MPI, then you would see how much the stock is valued by the market right now. But if you want to dig deeper on its actual worth based on its book value, so we might want to calculate the book value per share. And that's actually calculated by dividing the book value divided by the outstanding shares. All right, so book value, that's another term again. So actually, book value is just the difference between your assets and liabilities. So all of its asset minus all its liabilities, that's your book value, then divided by the total number of outstanding shares. Now, for MPI, based from the data, no, at 3.26 pesos, its book value per share is actually at 5.93 pesos. All right, so here you'd be actually be able to see that there's a discrepancy from these two sources of the how do we determine the stock's value, because when you look at its books, it's telling that it should be at 5.93 pesos per share. All right, but the market is actually pricing it at 3.26 pesos per share. All right, so this actually begs the next question, wherein we try to ask ourselves, how do you know if the stock is cheap? All right. Now, so you have the market price, yeah, you know the book value per share, but how do you know if it's cheap? And that's the next ratio that we're going to share with you this afternoon. That is the price to book ratio. So because the price to book ratio looks at the ratio between the market price and the book value per share. So it's trying to compare how much the market values it to its book value per share. So let's use this an example. Again, let's use MPI. So for MPI, its market price is at 3.26 pesos and its book value per share is at 5.93. So using what we recently learned about the price to book ratio, it stands to have a price to book ratio of 0.55. All right. Now, Metro Pacific is a holding company, so let's try to find another holding company. So let's try Ayala Corp. So Ayala Corp's market price is at 730 pesos. Then the book value per share is 531.41. Then getting the rough price to book ratio, we get 1.37 pesos. Sorry, 1.37. All right. So because its market price is above its book value per share. Next, the third is another holding company. You have JG Summit Holdings Incorporated. So its market price is at 62.3 and its book value per share is at 43.15. So using what we've learned a while ago, the price to book ratio is at 1.44. 1.44. All right. So again, the price to book ratio actually tells us how cheap the stock is relative to its market price and its book value per share. So the rule of thumb here is that this is just a very rough rule of thumb. It's good to be able to have a stock that's trading below one price to book ratio. All right. So from this example, MPI is 0.55. That's less than one. But again, it's when we talk about ratios, this is not something that since it checks that it's less than one, it's an automatic buy. No, so we have to look also into the other ratios. No, so how well is the company doing? Because again, when you look at this, it has two components. You have the market price and the book value per share. The decline in its price to book ratio, is it because the market price declined, or is it because the book value per share increased? All right. So yeah. So then let's weigh what are the pros and cons for those. So for example, if the market price goes down, then we know the sentiment of the investors there. But it's also good to see that if the book value per share actually also increases, then that lets us know that they have actually more assets. All right. Yeah. Per share. All right. There you go. So again, for me, the price to book ratio is good to be used if you're looking across a certain sub index or a certain industry. Then you can use that. But again, that is just one of the many financial ratios available out there for our guidance. All right. There. All right, so for you to be able to know this, the book value per share. So for those with accounts with us, you just go to analytics, then click on financial, then look at the par and book value. Because from there, you can actually extract the book value per share. By the way, this analytics, all of these are actually, you are able to actually extract this into an Excel spreadsheet. And from the Excel spreadsheet, you can do your own calculation, like how do you calculate the price to book ratio, divide market price from book value per share. All right, so there. For those who have pro access naman, it's easier for you because all you have to do is just go to stats, analytics, fundamental, price to book ratio, then you'll be able to see here. There you go. So this is for the whole index. But personally, I think this is better if you look at for the same types of companies or same industry, or yeah, you have to consider also because those ratios are just to simplify things, but I don't think it tells you the whole story. All right, so same with the dividend yield a while ago. We have the high dividend yielding stocks. That could be an opportunity, but we need to ask further questions in order to validate if that yield is sustainable or if there's really growth potential in that respective financial ratio. All right. Now, there. Next, a question. After learning that it's fairly cheap, we also have to make sure that if the stock actually provide high return to shareholders. All right, that's one of the key metrics. So for us to know that, we just need to calculate the return on equity. So return on equity is net income is calculated by dividing the net income divided by your shareholders' equity. So this actually measures the company's efficiency in managing assets to generate profits. Because remember, shareholders' equity is actually calculated, no? Please correct me if I'm wrong, Royce. But shareholders' equity is calculated by deducting liabilities from the assets. So yeah, so how the company is able to turn those assets into profits. This is what the return on equity measures. All right, so I'll show you some examples. Let's say Ayala Corp, its return on equity is 12.5%. Then MegaWorld's return on equity is 10.5%. All right, so yeah, that's how you calculate return on equity. But yeah, I think that's it for my part. But maybe as Royce transitions to the stock screen report, maybe he can also share more insights about return on equity. All right, back to you, Royce.
Hello, hello. There. Okay. Okay. So yeah, I think you defined it well in terms of um, return on equity. So yeah, I think right now in terms of our return on equity, this measures how efficient a company is. Yes, it's mentioned there because you know, keep in mind, for example, if you take a look at the US, I think it's a better example. If you take a look at the US, lots of companies there are spending a lot in terms of assets, especially tech companies. If you take a look at their net income, they're not earning that much. That's why when you take a look at the PSE, you can actually see numbers that are not astronomical compared to when you take a look at the US. Mainly because um, even though the tech companies there are really high, they're not even earning yet, but they're priced for growth. But this return on equity tells you if the company is actually doing well to earn enough to give back to its investors. So that's what you want, and that's what we are seeing in our companies. So fortunately, we're not seeing those kinds of astronomical um, expenses compared to earnings. So this ROE is best measured compared to peers, right? So, if you're asking us what's the best return on equity, what's the average return on equity, or what's a good return on equity, you always compare to peers. Because if I tell you right now what's the good return on equity, you know, most companies now are have doesn't have that good quality return on equity right now because this is a one of this is a different kind of year, different kind of earnings. So at the end of the day, you take a look at the peers, and you can see that through our probably we'll mention it also in our reports. So there. So next slide. Okay, so value play. I think the main theme for value play is this is a stock that has been really um, sold off, and yet it provides this returns that is not the worst in the sector. So it provides undervalued at high returns, right? So that's basically our definition pre-COVID right now. But of course, we will see the ROE levels of the companies, which are mostly single digit, some negative. But at the end of the day, it's significantly sold off. Yet it's not. It's more important now than ever to read brokerage reports because it tells you what to look ahead. Because if you just take a look at the numbers right now, it's definitely not pretty. But of course, the stock market is forward looking because by the time you see a good or improving number, you would have probably um, left a huge gains already. So let's discuss what we are seeing in value play right now. So next slide. Okay. So you can see here lots of companies. Mostly these are all blue chips. So you'll see here. Let's apply again what we did earlier. So we are seeing 5 companies. I want to buy a stock that is significantly cheap. So I believe in our previous best we discussed Megaworld. So we would like to discuss. Let's get MPI. Okay. So MPI in the next slide. Okay. So MPI. I think JP showed us here earlier that to go to see the price to book ratio, the 12-month trailing price to book ratio, you go to analytics, fundamental price to book ratio. I believe there was one question earlier on where to find the price to earnings ratio. So that's the one beside it. So to look at the price to book ratio, you can see here in this tab. So you can see here compared to other companies, compared to similarly big holding companies, MPI is one of the um, cheapest. And I will tell you why I picked this stock. So next slide. So okay, so looking at the fundamental analysis, yes, when you take a look at the past, it did actually posted a core net income of 5 billion, 38% down year on year. That's quite below consensus estimate, but it's still earned in the second quarter of the year. When you take a look at other holding companies, you take a look, some incurring losses. So MPI did not incur losses um, as a holding company. So let's try to look forward. So this, I will tell you now, the value added. When you take a look at the brokerage reports, you take a look at how we analyze the company fundamentally. So latest monthly numbers have actually been encouraging, right? So there's like domestic calls, average daily traffic, um, energy sales improving from May to June, right? So of course, no. When you take a when we probably see the August numbers, it's probably weaker. But the thing here is, it's at the end of the day, it's still hinged on whether there will be MECQ past August 18 or not. So should the Philippine College of Physicians, even the Malacanang says that they're not keen on extending, should that happen, we will see MPI's numbers to continue or to go back to its improving trend. So besides that, it owns Maynilad. So in terms of sentiment, you have more upside for that if the government and the water concessionaires decide on an optimal concession agreement. So next slide. So we take a look at the technical analysis of it. You can see it has been on a consolidating with a downward bias. So for us, of course, no, we take a look at the chart alone. It's good to buy once it breaks out of 3.43. So next slide. Because a breakout above 3.43 tells us that there may be a trend reversal ahead. So just support this peg at 3 pesos. So for example, if you buy above 3.43, you can set your cut loss below 3.10. That's a trader's mindset, applying it to fundamental analysis. So you combine both fundamental and technical analysis. At the end of the day, that's up to you. But this is one way we can provide you in terms of how we analyze stocks or analyze from stocks in the stock screen. So that's the thought process of it. So that's one way to look at it, and that's one way to utilize stock screen well. So there, next slide. So thank you. Let me turn you back to JP to conclude um, the presentation. Thank you.
All right. Thank you, Royce, for sharing that insights on value play and even extending to us his fundamental and technical analysis on MPI. All right. So again, we'd like to just to summarize what we've learned this afternoon. This afternoon, we've talked about the following. First, we discussed how do we earn dividend income from stocks. So I shared to you the 4 dates to remember. That is your declaration date, ex-dividend date, record date, and your payment date. Then we also talked about your eligibility. So what we're looking at is the ex-dividend date. You must own the stock at the close of the trading day before the ex-dividend date. Then we also talked about how to calculate your dividend yield. So we discussed with many examples actually. All right. Then we also taught you how to use the dividend capture strategy. All right. So because there are some instances that you could use them actually just to capture the dividend. All right. So next, how do we know if our dividends are safe? So we discussed how you can calculate the dividend coverage ratio. So again, it's the ability of the company to pay back the dividend to the investors. The higher dividend coverage ratio, the better. But when it comes to dividend yield, we must ask further and beware of the yield trap. Next, we also talked about how we can actually determine the stock's value. So 2 answers there. You have the market price and its book value per share. All right. So that leads us to the next question. How do you know if the stock is actually cheap? We use the price to book ratio. So the price to book ratio lets us know how relevant or how significant the market price is compared to its book value per share. And lastly, does the stock provide high return to shareholders? And yeah, we discussed about return on equity. And also Royce in between actually talked about the stock screen report and how we can actually use them, and even picking one of the stocks from the stock screen report, then identifying the fundamental and technical analysis. And yeah, those would actually be trade ideas for you moving forward. So the next question is, after learning all of this, what's next? All right. So all you need to do is just go to our website, www.firstmetrosec.com.ph, then click on open an account. You just need to complete the online form with your username, password, and basic account information, then upload the documents online. There are only 3 documents that is required. First is a government issued ID with 3 signatures, proof of bank account, and proof of address. So any billing statement will do. Uh, Electricity bill, utility bills, credit card bills, or yeah, anything that could prove your address. And since you came from this seminar, and for us to be able to track and help you in your account opening process, feel free to use the seminar code BEST or BEST. So when they ask you how did you learn about us, just input their best, and don't forget to actually take a screenshot. I believe they are asking now if you attended this webinar. Feel free to I think you need a screenshot. No, so it would be best if the speaker and your face will be there to us to verify that you really attended and you registered through this webinar. All right, so again, this is how you open your account in 3 easy steps. So again, all of this is brought to you by Finance Asia's Philippines Best Broker for 2017, 2018, and 2020, and hopefully also in the future. With that, again, this has been JP Billones and Royce Aguilar from First Metro Securities Brokerage Corporation, wishing you a good night.